On everybody, Q here from Hyperstocks. Thank you so much for coming on board. In this video, we're going to talk about the GDP report that we're expecting tomorrow, and we're going to speak a little bit about what we can expect for it, considering everything that we have known so far this week and the last few weeks about retail earnings and consumer spending and retail spending in general. So this was the GDP change in Q1 of 2022. This was released last month, I believe, towards the end of last month. We can see that personal consumption was up, private investment was up, businesses sold off excess purchased inventory in 2021 down, government spending was down, exports were down, and imports were heavily down. So this drove us down significantly by 1.4%, you could see. And the reason why this drove us down is because when we're relying on imports to come into our country in order to use them for our own personal goods, those imports cost our economy because we're stimulating other economies and bringing it into our country and using it rather than stimulating our own economy. Now, this could happen for a number of reasons, and the reason why it's primarily been happening is due to shortages that we've been having due to supply chain problems. So the shortages are causing Americans to use their personal consumption, which is up from as you can see from the last report, and they're using their personal consumption to now spend into imports rather than spending into what we already have here due to shortages and a number of other factors. So with that being said, in the last quarter, what we've seen is a heavy increase in geopolitical tensions, especially with Russia, which is going to bring us to the next point that big box retailers and retailers in general, fearing that there would be more supply chain problems, began to stock up. And you saw reports from Target and Walmart saying that they stocked up on the wrong things. So now they once again increase the imports that are coming from the outside of this country. And now they're also saying that, well, consumers used to spend on big box items, but now considering inflation is at a 40-year high, unfortunately, those same consumers are starting to spend their dollars in different sectors or different sections of their stores. Things like food primarily, so more things like groceries rather than big box items like TVs. So now you have the big box retailers, which are going to be they're going to be the people that meet consumers face to face. Consumers are not spending on the big box items. We already have supply chain problems, and they're all holding big box items, furthering our supply chain problems, which is going to impact our growth in general. Because now, once again, we have too many imports, and they're sitting on shelves, and consumers are using their personal consumption to now bargain hunt and spend on smaller ticket items and groceries, which is going to hurt our growth overall. Now, the items that did sell, that were reported to sell, unfortunately, are now sold at an inflated dollar. So even the profit margins that these retailers were making are now sold at a loss or little to no profit for a lot of these big box retailers, eating more away of their profit in general, therefore hurting their bottom lines. So that's why when we saw Walmart and Target report their earnings, that was already a clear indication that perhaps our growth for this quarter is also going to be impacted once again. So in terms of the GDP tomorrow, all things considered, we do have a problem on our hand because once again, if we look at here's a good chart to show it, the imports versus exports in March of 2022, our exports were only at 241 billion. Our imports were at 351 billion, so there's a deficit of 109 billion. So once again, we're facing the same problem on this chart where imports are going to drive down our GDP number and our outlook in general. Now, one thing that may, and we don't know this yet because we haven't seen the actual report, is government spending. It may actually rescue us because when it comes to government spending, we got to take into consideration defense and military. And we know that that number has escalated in recent months because of the Russian and Ukraine tensions. So perhaps in this report, something that could set us back into balance is increased government spending into defense. But that's going to rely on the report itself. Overall, from the numbers that we've seen from retailers, even Amazon reported a decline in online sales. So if If retailers are reporting a decline, if Amazon is reporting a decline, now you have retail and online reporting a decline. Just last week and the weeks before, we can already assume that generally speaking, we have slowed down in spending as consumers due to different numbers of reasons. And one final thing to note is that the stock market itself came down, which automatically scares people. You know, when people are in this invested in the stock market and it's coming down at a rate this fast, people don't want to spend as much. They're not inclined to spend as much due to the fact that they're afraid for their own finances. So that is something to also keep in mind. Now, in terms of going into tomorrow, the last time we got a GDP update, I believe, was April 28th. That GDP did not come in line, that update. However, you can see that on April 28th, we rallied all day after the release. So markets, they don't often digest news right away, and sometimes some news is already digested by the time it comes out. So going into tomorrow and the release of the new report, you don't want to react with haste. You don't want to trust it too fast, because on April 28th, although we rallied for a full day, we came down sharply the very next day and closed much lower than that high. So today we already saw markets rally going into the end of the day. Nvidia earnings declined in post market, which actually caused the S&P 500 also to decline. But at the same time, that GDP report can change things around if the numbers don't come in line. Anyways, guys, thank you so much for checking in. I hope this was informative, and thanks again.